Hello traders, Gary Wagner here, just before 10:30 in Honolulu, 4:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 18th day of July 2014, and this is the daily report for gold and silver. After such a dramatic day yesterday, we do have some backfill and some corrective action in the market as we see gold trading at $13.10, puts it off roughly $7 to $8 on the day. The low $13.0390, the high $13.17 on the day. Silver also trading lower on the day, down roughly 29 cents. Current print on the screen is $20.83, so it is back below $21 per ounce with a low of $20.66, a high of $21.22. More on silver towards the end of the show. There can be no doubt we've given back roughly half of the equity that we saw on yesterday's gain as we see the market trading well off of these lows here, but nonetheless down, as I said, about $7, $8 on the day. We've had equal highs, as you can see, right up in here. And what we identified earlier in the week was a simple two-day candlestick pattern known as a piercing line. That is this pattern right in here. We talked about the definition of that particular pattern. After a defined downtrend, you get a new low, a long red candle. Following day on a cash market, it will always open where it closes, but you'll get a green candle that closes at or above the midpoint. We got that. We also talked about the fact that you really don't act upon that without a confirming candle. We in fact got the confirming candle during the tragic events that unfolded yesterday, the shooting down of a civilian airliner and the escalation of the conflict over in Israel and Gaza. Today, though, we are seeing a little bit of backfill. We are seeing some corrective action in the market as we're getting the market giving back roughly half of what it took in. But considering yesterday's dramatic rise, that's not that much out of the realm. The real question is whether or not we are going to find support in this area. Of course, the area that I'm looking at right now is roughly 1305. We have 1305 as an area that we've identified. You can see that the lows came right to this, according to Kitco low being 1303. My sense is that we will probably find some sort of support in this area and begin to trade back higher. My current belief is that we'll probably see this market go back and test roughly the 1330 area. That would be an area that I believe is very accomplishable, and it is our current target. We did enter long positions in the market yesterday. Traders that took that call are in roughly 1316. Stops, I believe, are below 1298. And as I said, the market's low today was around 1303, so no challenge of any stops being hit. However, we're not seeing the follow through that I'd hoped to see today, and that's really based upon the fundamental events that we are currently seeing in the market. Of course, on a technical basis, what I'm looking for in this particular trade as well as over the next week is affirming in the market, taking it, as I said, up anywhere between, call it 1320 to 1333. And if in fact we are in some sort of a corrective structure here, some sort of an ABC, that would be followed by a final C wave down, in which a flat would take us back to this 1291. Now, I do believe that the most recent selling, as I've said, has been really technical in nature, and I certainly would not want to be short over this weekend. Although we had conflict last weekend and the market sold off dramatically as it opened up in Australia on Monday. So we'll have to see how the market unfolds. But as I said, I am currently earmarking a potential top in the market, roughly 1331 to 1333. Now, when we convert our daily chart, this of course is cash market chart, into our Japanese average candles, we have gone green. We went green as of yesterday. However, in terms of any kind of strength of trend, we're trading down today, but this relates to the midpoint of the prior day, and that's why we're getting a green candle on a down day. But we still do not have an absence of these lower wicks. That's what we look for, because when you have an absence of the lower wicks and when you have a strong body size, it really defines the strength of the trend as being fairly moderate to strong. When you're looking at something like this, you cannot make that same claim. If anything, if we still have an uptrend intact, it has a moderate to below moderate strength in terms of the uptrend that we are currently witnessing. We are looking at a 360-minute chart, this in standard candlestick format. The most recent rise that we saw, that's right here. Our small corrective action that we have today is right here. You can see that this most recent candle has gone green. So my expectation, this is a sub count as I break apart this particular wave, which I am labeling as a B wave, but my sense is the B wave will be composed of a 3 count. 1, 2, our final 3, and our 3 should, as I said, terminate roughly at 1330 to 1333. Now, one of the charts that we have been using to kind of bring us some sense or perspective of our current trend has been this 2-day chart in which we've put in our Andrews Pitchfork. On the Andrews Pitchfork, of course, what we are really focusing in on right now are these outer prongs, specifically the 0 prong. This is the 100 right here, the 0 here, and of course, this is our handle, and our handle comes in from the record high at 1900. We've made the assumption that as long as we've stayed within this channel, meaning 0 to 100, we have absolutely categorically been in a defined downtrend. We saw this market only on one occasion, and this is the $200 rally that we saw end of last year, terminating beginning of this year. Actually take us to, but not breaking out and above this prong. We did see a difference this time in which we saw the market actually break above that prong, and it is still trading above that prong. So my sense is that even if we see the market move to 33 and then move back down, as long as we maintain above this outer prong, this 0 line, that tells us we have the distinct possibility that we have in fact entered a bullish phase, an impulse phase, as opposed to this bearish count, which literally took the market as we watched it trade from 1800 down to 1180. Now, our longer term charts are definitely showing us weakness in the market, this being the week that we have just seen right in here. It is an engulfing bearish. It does have a low that is down around 1291, but we are seeming to recover well above 1300 and close to 1311, which is another number, as you know, that I have been consistently looking at as this market was forming a base. We're also seeing corrective action in silver. You can see this top at around 2120 here, and our top for this nice long rally culminating at around 2160. The interesting thing about silver when we compare it to gold is this most recent price fall took the market to only just below a 38% retracement level, whereas in gold retraced to a 50% retracement level. So we've seen the correction be deeper in gold than we have in silver. We are again off of the lows, but not as dramatically off of the lows as we are in gold, still currently trading down, and more importantly, trading below really this 2087. We're just there at about 2084, and that of course is a 23% retracement. Maintain long positions in both gold and silver, maintain stops. We will look to adjust those stops depending on how the market opens on Monday, and then trail our stops, adjust our stops by Tuesday or Wednesday of next week. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Monday for another daily update and review. Bye-bye.